Cool.
Ladies and gentlemen, welcome to the NFT show. On today's episode, we have a very special guest, an interview with the one and only Robbie Young from Animoca Brands. So we're going to dive into what Animoca Brands is at this moment in 2022 and a little bit about what we can expect in the future. As always, nothing in this video is financial advice. We are not financial advisors. The NFT space and the Web3 space in general is insanely risky. So always do your own research. And as always, if you enjoy the content, hit the like button, smash the subscribe button, and share the video with your friends. Robbie, welcome to the show.
Hi, thanks for having me.
Absolutely. We're pumped about it. So, you know, people in the NFT space, everybody in the NFT space knows what Animoca Brands is. But if there are people watching from outside the NFT space, you know, I'd love to hear a little bit of a kind of elevator pitch on what Animoca Brands is and obviously, you know, what you do over there, because it's a pretty significant position, I'd say.
Sure, no problem. So we are, you know, at heart, we're a game company, and we've been doing that for many, many years. And for the last 5 years, we've been making games exclusively using blockchain technology, so Web3 games. And what we do, you know, what that means is basically that players in our games can have true digital ownership over all their digital stuff. And we also are a very active investor, so we invest off our balance sheet. And we've been doing that as well for the last 4 or 5 years. And so now we're about 16 game studios around the world and close to 400 investees. So reasonably large.
Yeah, it sounds like it. Oh, go ahead, Nick.
You said 400 investees. Does that mean LPs?
No. Like companies in which we've made investments.
Got it. Okay. All right. So you've invested in 400 companies. That's a pretty significant amount. And that's directly...
To be precise, I think 390. So not quite there yet.
Okay. Yeah, huge difference there. You know, way closer to zero in terms of 390. But like one question about that, it's an odd structure when you have like your corporation is investing directly off the balance sheet into these startups. It's not like a separate venture entity.
Correct. Which is not dissimilar to what, you know, the world's largest game company, Tencent, does.
Fair enough. Tencent is a huge enterprise. I mean, they're also operating. They own a bunch of internet brands as well, beyond just games. Pio, you were going to ask something there. I didn't mean to interrupt. Sorry.
Yeah, no worries. And Tencent owns TikTok, yeah?
No, they don't. But I wouldn't be surprised.
Yeah,
that's ByteDance. That's ByteDance. But Tencent, I mean, in the game business, they are the 8 million pound gorilla. I mean, they have stakes in pretty much every major game company in the world. And so, you know, I think comparisons are only in terms of structure, definitely not scale or achievement.
Sure.
What would you...
Go ahead, Nick.
Well, I was going to say, what would you say is like the biggest gaming enterprise within your portfolio at the moment?
Probably the best known would be the Sandbox, I would say, which is kind of a metaverse UGC platform.
And so I own Sandbox land. I've been in that for a while, or at least actually I guess not that long, since it's been around longer than I bought the land, but I bought it last year near the Bored Ape Yacht Club. What's like sort of this is one of the only comparable thing that I have, and you guys are. What's the investment structure with like in the partnership associated with Other Deeds and Yuga Labs?
So we're shareholders in Yuga Labs. We made an investment in them at earlier on this year, and we also assisted them as like operating partners to launch the Other Deed sale.
And were you all behind? Because there was some ambiguity at that moment during the launch where it was like, oh, did Animoca design these land plots? Like who architected like that drop? Was that exclusively Yuga?
So we helped them both with the launch of ApeCoin and the launch of Other Deeds, but the overall, you know, master plan and everything, that's all Yuga.
Okay, cool. I can like ask a bunch of questions, Pio, so I want to give you an opportunity.
Nick, I want to get out of your way. I'm ready to rock whenever, but I never want to stifle Nick's inspiration. You're getting me excited here, so fire him off, Nick. Let's go.
Well, in terms of you all partner with Yuga. The obvious thing, and we were discussing this right before we came on stream, is like where we're at right now. Right now, it
Mhm.
feels incredibly bearish, volatile. It's a dark moment in the overarching crypto space, and that obviously bleeds into the NFT space. What, if any, impact does this have on Animoca at all? And sort of, is it relevant? Period. Like for
Sure.
Animoca.
I suppose the first thing I think is to put things into perspective a little bit. So, for anybody who remembers as recently as 2018 and 2019, I think now will feel like a really great time by comparison, where things are very easy by comparison. It's just that if we make comparisons to last year or earlier this year, then obviously, I think the market for investment has gotten much more challenging. And I think that's one thing that has deterred a lot of people from, who were thinking of coming into the space and looking at it as a, something that was relatively easy in terms of being able to track capital into a new venture. I think those people now, the so-called tourists, have gone away. But I think that um, there's been a lot of noise. Obviously, people are concerned about the prices of tokens in the crypto market and the relationship that that may or may not have with, lots of different kinds of projects that build in Web3. I think the one thing that I've started to notice now that's fundamentally different is there is definitely, in my opinion, a decoupling between entertainment products and financial services that both rely on Web3 as a core technology. And that's something that wasn't true in 2018, 2019. I mean, they were inextricably linked because anybody who was new to the space just viewed everything that was on blockchain as some kind of financial instrument of one sort or another. And even early
Cryptocurrency, right?
Yes, exactly. And people used to call games crypto games, right? And it was mainly because a lot of those early products were also built by people, even if they were entertainment products, they were built by teams who came from a financial services or a cryptography background. They were not game studios because they were people who were fans of crypto to begin with, and then decided that they would make games. I mean, that's how CryptoKitties was born, right? And now I think you see a much more sort of a broader church, if you will, of types of companies and players in the space. You see a lot of traditional game companies that have now pivoted to create Web3 product alongside their Web2 product. Um, and so I think that there's definitely, even if you look at something as simplistic as the prices of NFTs that are available for sale in the secondhand market, the overall effect of crypto generally, of like traditional fungible token prices, is not as directly correlated as it used to be.
I'm wondering, in terms of the portfolio of games that you all are in. Like, you've raised a large amount of capital so far
Mhm.
for Animoca. I don't know the exact amount. It's in the hundreds of millions at this point.
Yes.
And uh, the question I have is sort of like, how, like, you use Tencent as an example. Tencent has like mature in market games, right? You got
Mhm.
PUBG, League of Legends, some of these like larger, massive brands, basically, as it applies today. The crypto space, in perspective, is like, or in contrast, is way smaller relative to the
Mhm.
traditional gaming space at this point in time. Do you all, like, do you generate revenue at Animoca? And if so, is that through, like, is that in partnership with Sandbox? Like, I don't know what the relationship there is specifically. And if no, what's sort of like the time horizon that you all are operating on as this steward of capital?
Sure. So I guess a couple way things. First, to answer your question about Sandbox, we're the majority shareholder of the Sandbox. It is a subsidiary
Okay.
of ours.
Okay.
And we operate 16 game studios around the world, which are our majority or 100% subsidiaries. But
Okay.
we, I still refer to them as studios as opposed to just 1,000 employees of Animoca Brands,
Mm-hmm.
because we like to have a lot of independence and we encourage it in those studios. And most of them came to us through acquisition over the years. And we have a philosophy that great games are often made by smaller teams. We don't really believe, at least for our business, that people like to work in a 500 or 1,000 person studio with lots of hierarchy and bureaucracy. We think small studios of 30, 50, 80 people can build amazing games. But to grow then as a company or a corporation, we need to continually add incremental studios, and that also helps us to bring on board talent in particular types of content verticals, because it's very difficult. Like, you become an expert typically in gaming at one, like you're an expert at first person shooters or trading card games or racing games, because there's physics involved that's different from shooting stuff. And so very often a studio will hone its skills over the years building many games in the same kind of vertical niche. And so often we look to attract talent in different verticals that we'd like to go into, because we think that they're particularly interesting as a way to connect with consumers. In terms of the business, we do generate a substantial amount of revenue and bookings. And so we, and we are still a public company, so you can refer to our website for that. And the information is disclosed there. And in terms of external capital that we take on board, we deploy that for various things, and that includes M&A, so acquiring new studios, obviously a little bit for working capital, and also obviously for investment, because we felt, particularly in this early stage of sort of the infancy of Web3 gaming, that there is a tremendous amount of opportunity out there to sort of join some great businesses on their journey from a very young age.
Incredible.
And
and
sorry,
so,
my internet was choppy there.
No worries. I mean, great answer. And Robbie, like, for someone like you that's building like you just mentioned, in the infancy of blockchain gaming, I don't know. So I'm biased. I'm full on. I'm a full believer in blockchain and crypto. I'm also a full believer in blockchain gaming. How much different does the landscape look in 4 years than how it looks right now when you think about blockchain gaming?
I don't even think you'll recognize it. I don't think we recognize it from 2 years ago, or even a year ago, frankly. I think, and that's obviously what's exciting. I mean, I'm a little bit of an early stage junkie, so I love this part of the adoption curve. And I do think that one of the things about blockchain gaming is that term is going to end up getting phased out sometime in the next couple of years, because it'll, in my opinion, it'll just be the infrastructure of games, the same way that we used to say online gaming.
Yep. Well, and I'm sorry if I'm cutting you off with my face. It's because my next question was going to be, is blockchain just flat out a back end or like a baseline technology upgrade for video games right now in this bear cycle? We do daily shows, right? So we're constantly having discussions about crypto and NFTs.
Yep.
Right now in the bear portion, the bear part of the cycle, everybody, it's very popular to say like, oh, we were too fanatical about this idea of blockchain. Not everything needs to be on the blockchain. The blockchain technology maybe isn't even better. But to me, it just feels like it is just flat out a technology upgrade for gaming. Just like how you said online gaming, was obviously something special when it first came out, however long, 20 years ago. But now every game is online pretty much, right? Is it the same idea in your mind when it comes to blockchain?
It is, although I think I would add one sort of nuance to it, which is I think blockchain is what's going to deliver the promise of Web3, but that actually the promise is digital ownership. And so property rights of digital stuff is really the milestone sea change moment, because I think that we now have, 1 or 2 generations of young people who have grown up with this idea that everything digital should be free and has no value, because you can just download it off of the internet or subscribe to some service for $10 a month, and then the world is yours for free, quote unquote.
Sure.
And I think that what blockchain allows is it gives us, back digital property rights management, which we never really had successfully before. And so we can go back to a model that respects the copyright and the input of creators, and hopefully is much more fair for creators, but that grows dramatically because it is more fair to creators, because creators see an incentive to continue creating, and that they're not just, getting exploited by platforms in the middle. And so I think that part is really the exciting part here. And so if we look back, 2 years from now to today, it's going to be more about, in 2 years from now, it's going to be more about taking for granted the idea that digital stuff has value, and I can own my digital stuff, and there's value to that.
It's interesting because I was watching, I don't know where I saw the video. It could have been TikTok for all I know, but there was a video of somebody that was discussing essentially the shift towards reduction in ownership, that a lot of corporations as a whole, that we're just moving towards a renter-based just economy, period. Like from furniture, from everything. You don't own anything is kind of directionally where we're headed, which is interesting. Because, I mean, you could argue that if I can't afford anything anymore because the corporations have essentially absorbed all of the products and just artificially inflated the price because they can rent it out to me for much for greater revenue, then inevitably, it's interesting that digital ownership becomes an alternative area to operate, basically, as an individual, where I want control over something. This gives them a route, which is one way to think about it. But I'm like, you mentioned that aspect of ownership. I'm curious, for the thesis behind a lot of the games that we've seen so far within Web3 universally pretty much is focused on, outside of the exception I would say is, like, last year, and especially the year before, was very heavily focused on play to earn. And that was like a major part of it. And yes, I mean, the NFTs are part of it, but it was really about the earnings being generated off of out of playing. I'm wondering, like, when do you see, because we're seeing a pushback from a lot of traditional gaming, non-blockchain, non-crypto gaming space against NFTs. When do you see these two things colliding? And is it essentially the responsibility of companies like Animoca essentially to pull us into that future? And what game are you looking at then, which becomes that shining example of ownership within a game that also has an insane user base and gameplay? Because so far we haven't, it hasn't matched up, and all of the naysayers have easy, metrics to point to. They can be like, oh, well, Decentraland has 50 people who are playing it in each day, so why is this thing ever going to work?
So I think there's a lot to unpack there. There's several different issues at play. I think the first thing I would do is I would make a comparison to the I was going to say transition, but I would say the addition of mobile as a platform to PC and console in terms of gaming. So when mobile came along in 2009, it took, most people don't remember that it actually took until 2012 for Angry Birds to come out, right? So there were 3 years of us, with the beer app, where it looked like you were drinking a beer and stuff like that, where game companies made games that were based on a paid download, and they tried to simulate a joystick controller on the screen of the mobile. Do you remember that? And it just didn't work because they were trying to adopt conventions from console games directly onto this tiny screen, and it didn't fit the medium really. And Rovio were the first ones to brilliantly engage users with swiping, because that's what you do naturally on a phone, and it worked. And obviously Angry Birds is still a hit now, like a decade later. And I think at that time, in that intervening period for those 3 years, you could have said exactly the same thing that critics of blockchain gaming say today, which is, the games aren't very good, and why would you use this platform? It's terrible. The screen is too tiny. The controls are clunky. The blah, 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 blah. The payment onboarding is terrible. I opened a Google Play account and I can't sync my credit card. It rejected it. Mobile had exactly the same problem. right? And so this is what happens at the beginning of technology cycles. And the other part that people forget is, particularly with gaming, to make a good game takes years. And so to expect great games in the market, literally 2 years, well, 4 years after the invention of the NFT and 2 years after NBA Top Shot got a little bit of traction as a collecting game, I think is, it's difficult.
Well, one distinction that, in terms of at that time, though, because this has been, I've been stewing on this recently. I was
Hmm.
focused on Facebook, was actually the area that I spent a lot of my time
Yep.
providing commentary on, interviewing people like the founders of Zynga and some of the other products that came out during that time. And
Hmm.
something that was so fundamental at that moment, which I would say, especially for Facebook, not the case anymore, especially the case for mobile app developers, was inherent. Facebook was inherently viral. iPhone apps were not viral, but in incredible demand. The average number of downloads of apps per user was like skyrocketed pretty quickly, because it was like this cool, shiny new object that everyone was downloading every single app that existed, the beer app being one of the
Hmm.
examples that you were utilizing there. That seems to be the one missing gap at this moment in time for me is and this is as someone who holds the NFTs in this space, and we have a show on this, but this is the one contrast that I feel at this time, where I feel very much more, I don't want to say religious, but like almost in the sense that I'm like, no, trust me, this will be a big thing when I have these conversations with people. Whereas at that moment in time, there were plenty of examples of apps that had the beer app being one of them. There were other things that at least, hundreds of thousands or millions of people had downloaded, and immediately businesses, their ears perked up and eyes opened and said, holy cow, there's a huge audience, a pre-built-in audience. That's the thing that I wonder about this space. And where do you think that's going to come from?
Sure. So I think Facebook as a gaming platform, the success of Facebook as a gaming platform was due to one thing, and that was openness. It was wide open for developers, and
Yeah.
developers could make good money on Facebook as a game platform before Facebook decided to take all of that IP for themselves, right?
Yeah.
And close the platform, close the door behind all those developers to whom they promised it would remain open. Um, and I don't think developers have forgotten that, to be honest,
No, it was
even though it's
painful.
been a decade.
I remember a lot of people at that point in time that came in, but there was also Mitch Kapoor. Well, I remember speaking at that point in time saying, he was like, here's what's going to happen. And basically called Facebook's playbook and was like,
Hmm.
they're going to close the door inevitably. Microsoft did it. Apple's done it in certain
Yep.
ways. And even right now, the biggest friction, you see the Epic Games battle playing out with Apple, is essentially that like it's inconsistent. Everyone's, I forget what the 10K or whatever report they need to file. I don't
Hmm.
know what the filing is, but every quarter, some of the disclosures that a lot of those companies have is consistently, we have no control over Apple's app store, and our ability to upgrade this app may be limited by them at some arbitrary point in time. That's
Yep.
a risk that's built in. So I think every developer has experienced that, but it did enable certain brands to sort of like catapult off a very limited number. And I think the mobile app revolution, to what you're talking about, has produced a bunch. You're saying that this will as well. My
Yes.
question is, what do you think is that like hook, or maybe you
Sure.
don't even know
So
yet,
I
that's going
think
to
the
bring people on?
I think the catalyst to blockchain game adoption specifically is just generally Web3 adoption. It's
Mm-hmm.
people opening wallets, just the same way that mobile game adoption was due to people buying handsets. And so the question is, what's going to get people to open wallets? And that's a combination of things. Part of that is the responsibility of our industry. So people playing games and being like, oh, this is a really cool way to play a game, so I'm going to open a wallet for the purpose of playing this game. And then, people also are opening because they want to buy crypto and open Coinbase wallets or MetaMask wallets, or do e-government and things like that, where those things are being rolled out on blockchain as well. So I think it's a combination of things. I do think though that uh, sort of consumer adoption is going to come more from entertainment products than financial services and other types of products. And I think the trick is going to be simply demonstrating to people the benefit of ownership, because the moment that you actually understand that you own something, as in you get to sell it or send it to somebody else, it doesn't matter whether you make any money on it. The fact that you get any money for it is already like, wow, wait, what just happened? You know, I've been playing games for years and I've never gotten anything back ever for any of it.
No, I
And
mean that. Oh, go
that
ahead, Caleb.
feeling will make an impact. I also love what you said. You said more is going to come from the entertainment side. I think about it like this: how many people have an Xbox or a PlayStation or some sort of gaming system, a Nintendo Switch, whatever, versus how many people actually own a stock?
Mm-hmm.
Yes, a lot of people own a stock, but I would have to think that there would be, orders of magnitude more people that own a video game system.
Yes, and I think the thing that was lost on the original sort of idea of play to earn, and I'm one of those people that doesn't think play to earn is a bad thing. I don't think that it's the only thing, but I think that it's really cool that there's a new innovation in gaming that is completely novel and was invented last year. So that to me is, exciting as somebody who participates in the industry. But I think what was lost in the noise of the success, outsized success of play to earn for a period of time, um, was this idea that it was about making money in games. I think that that overshadowed the idea that actually the innovation is not losing all your money in games. The fact of having residual value, because I started playing games when when consoles were invented, which dates me. And the idea at that time was that you spent a lot of money on a game, a huge amount of money actually. And so when you wanted more games and you begged your parents for more games, often what would happen is you would try to sell some of the old ones on a secondhand market, typically in a store, which is how GameStop and all these places were invented. And there has never been a secondhand market for our digital stuff because we've never been permitted to do so. And yet the idea of preventing a kid from selling their secondhand cartridge, a physical one, is ludicrous. You assume that that should be your right because you own it. So why is it any different if it's a download? And so I think that the innovation that people will on a mass basis really appreciate is the fact that now there will be some type of secondhand market for digital stuff, which trickles down to the idea that if I want to try a game out and I want to try content, there will be a secondhand market where that stuff might be less expensive than going to the primary market. And that's a great way to bring new users into the space too. It's not just about, people, a lot of people took the success of Axie Infinity as an indication of what the model with a capital T should be for games in Web3. But it was one incarnation, and it had a lot of innovation in there. But it was one view of games. I think yes, the price of Axies was very expensive for a period of time and was a huge barrier to entry for people, and that was solved by coming up with the guild model. But there are other ways to solve that too. And this idea of having a thriving secondhand market of valuable and not valuable stuff is also really interesting.
Well, I'm wondering about your background in terms of what transitioned you into this space. I mean, it seems like you have a long history in media,
Mm-hmm.
and then like, where was the pivot into gaming? I mean, it seems like you were operating on the executive level for a while on the media
Mm-hmm.
side of things, of which I mean, I personally have a ton of questions just since we have
Sure.
technically a media business, but although it's completely different nowadays versus having magazines. But I'm also just wondering, like, what was your transition into this space, and has that been more on the strategic side, like thinking about like operationally capital markets and that side of things, or were you like, I want to be in gaming? Like, what was that
Sure.
transition like?
So I think I moved into gaming about 10 years ago. Animoca Brands was founded or co-founded by my friend Yat. We've been friends for 25 years. So I was aware of what he was doing, when he originally started the business. And I had just sold my last business, which was a traditional media company. Um, and it was funny because I've been in TMT my whole career, and I've done all of them. And gaming, mobile gaming in particular, to me seemed kind of like the culmination of everything I'd done before. It was a bit telecoms, it was a bit advertising, it was a bit internet, it was media. It's all those things rolled into one product. And so I thought, oh, this is, that's pretty cool. I feel like maybe I can, bring some experience to bear here, but at the same time learn something quite new. Um, Plus, I really like Yat, and I appreciate his, he's quite he's got a lot of foresight, and so we started working together, and then as you alluded to, my role has typically always been more in a, I guess what we call corporate development side of things, everything from fundraising to M&A to thinking about strategic direction of the business, and I'm not trained as an engineer or anything like that, so don't ask me anything too technical. I can fake it for a little while, but that's about it. Um, and But I think for me, it was really exciting to see how these kind of products connect with people, because I've been in the content business and I've been in the advertising business, but I also am aware of the power of, the internet as a distribution platform, and a way to engage people beyond borders. I think for me, one of the most frustrating things about being in the advertising business is how fragmented advertising spending in traditional media tends to be, because it's based on geographic territory, and I think that that's a big it's a big limitation. Um,
What this just popped in my head though. You're a public company investing venture capital off the balance sheet. Is there an example? Like usually most of the holding companies that I'm familiar with, like IAC and some of these other, usually they buy a mature business
mhm,
basically that's now off, shooting off some sort of revenue, even if it's profitable or not profitable. They're able
mhm.
to pull it into the overall holding company. What's that like operating a venture business? The only thing I'm aware of is like essentially SPACs. Like I can't think of anything else that at least that comes to mind to make that sort of venture investment approach outside of some of the large corporate, like Google has an internal, corporate
Sure.
development investment arm outside of GV. So yeah, like what's it like operating a public company with like, and what do shareholders that are typically biased towards quarterly results? How does that influence some of your decision, and also what percentage of your balance sheet are you deploying specifically towards long-term investments?
Sure. So I think a lot of questions there.
Yeah, sorry.
Um,
He,
I
he
tend to
loads
spew
them
them.
up.
I like to load them up into
no
three
problem.
at a time. It's a sense of like urgency, like at the end where you're like, oh, but here's one question that's three.
No problem. So the first thing, to be specific, we're actually an unlisted public company.
Okay.
So we used to be listed on the Australian Stock Exchange
Yeah,
until
that's where I saw your information. Yeah.
2020. Yep. And then once you delist, you're not necessarily a private company anymore, because Australia, like many jurisdictions around the world, most, in fact, once you have a certain number of shareholders, you're a de facto public company. So in our case, we have thousands of shareholders. And so we're still a public company in Australia and report as such. And I think the other thing that's interesting is that we're not actually that new a business either. We've been in the same office space for 22 years.
Wow.
And we actually have employees young who weren't born when we moved into our office. um, so I think that gives you some perspective on our overnight success, quote unquote.
Yeah.
um, and uh, and I think as far as the operating business goes, we have probably I don't know, in total about 30 people um, that focus on investing activity, and then about 950 people focused on making games.
Okay.
So definitely, we do have a strong core business in terms of game development that drives everything we do. We're better known in recent years for our investing activity because it's much faster to write a check than it is to make a game.
Yeah.
And we've done a lot of them, right? So, 400 investments in 5 years, you put out a lot of press releases. So people come to think of us for our investing activity, but actually, they forget about the Sandbox and Phantom Galaxies and Life Beyond and all the games that we've come. We were the first one to make. We were the second one to make a blockchain game off of a major sports license with Formula One Delta Time. We have the biggest UGC platform in blockchain gaming now with the Sandbox. We had the first AAA game in the space with Phantom Galaxies. So we have a reasonable track record there, just even with the in-house product, not to mention, early investments in things like OpenSea and Dapper and Sky Mavis.
And speaking of the investing side, I believe, if I recall correctly, you all invested in our colleague. We do a show with him, Elio Trades' gaming ecosystem.
Yes.
And he's really big on gaming. I think if you ask him what he thinks is going to happen for the next bull run, he says that gaming is going to lead the next bull run. So I think that that's a really interesting concept. I think that's totally in line with what you were talking about the separation of financial instruments and entertainment products,
Mm-hmm.
and how at the end of the day, entertainment products are always going to have way more mainstream appeal.
Yep.
What does that look like, right? Because on our morning show today, I was talking about how I think that there's going to be much more capital, deployed into Web3 next bull run. However, there will be more, legitimate entities to deploy capital into. So rather than having Bored Apes get up to a $450,000 floor, 400K plus per asset, it'll be much more kind of sober numbers, but spread out around many more legitimate entities that will attract capital. When you think of what gaming leading the next bull run could look like, does that mean that the in-game assets end up, being like good investments for people that manage to get a hold of a rare sword in a game or something like that? Does it mean that the tokens associated with games will do well? Like what could you see happening? Obviously, it's hard to predict the future, but I'd
Sure.
be curious to hear any thoughts you have.
So I would break that down into three different buckets. I would break it down into in-game content, in-game currency, and ecosystem fungible tokens. And I think they all have different benefits, but the last two are kind of similar. So in-game items, I think, will always have value proportional to their utility and rarity. And I think that to understand that, you just look at traditional Web 2 games and say to a super fan who plays World of Warcraft, what is an individual item worth to them? Because it has value to them within the perspective of that ecosystem that they play in. So if you have to grind for, months and months and months and kill 50 bosses and go up 20 levels to be able to earn this sword, that has value to you as a player and assumedly has value to everybody else who plays the game as well. And I think the only sort of sea change for a Web3 scenario is that you will actually own that. So there could be you could sell that to somebody else who doesn't have 50 hours to spend killing bosses.
Right.
And so that I think is the sort of more mature version of the play to earn model, which is just basically um, being able to acquire things from other people who had more time to spend than you did acquiring them, right?
Time and skill, right?
Absolutely. And I think that healthy tension has always existed in games. There's just never been a facility for players to transact with each other in that way. But that has always existed, which is why there have been gray markets in very successful, assets or in the assets of very successful games, particularly MMOs in the past. I think when it comes to in-game currency, so fungible tokens, in-game currency, and also ecosystem like, Ethereum or Matic for Polygon or, various, layer 1 and layer 2 chain tokens. I think that the value of those, in my opinion, um, will always be most impacted by the amount of activity that happens there. and the amount of utility that people have for those ecosystems, so that as those ecosystems thrive, and so the macro would be a layer 1 chain or a layer 2 scaling solution, and the micro would be an individual game. But I think the function is the same. So as people find great utility for that token and invest in that token because they're spending time on that chain or in that game, then it will become more valuable. But it also has value to them because it's their reward for spending time in that ecosystem and participating and contributing to that ecosystem. That's why Web3 is a much healthier model than Web2, because if you're devoting all your time to Ethereum-based activities, and as a result you own Ethereum because you're participating in that ecosystem, you get some benefit back from all that time spent, because the value of Ethereum goes up because you and lots of other people are doing that.
What do you look for? I'm wondering, like, I'll start with the first question, and we'll come to the other one later. The question is your and I kind of alluded to this before, and you answered there was a very specific, because of the way that public companies are in Australia, it's like a nuanced way to what classifies you all as a public company.
Mm-hmm.
But I'm wondering, regardless, you have stakeholders, those being the shareholders of the company, and I'm assuming there's a board of directors and et cetera. In terms of, like, because games are so long-term focused, because investments are so long-term focused, what's that just like on a practical level of managing a business that's thinking that far out in the distance? Because I think much more about next month is where Pio and I spend most of our time operating. And I'm wondering, where are you when you're usually planning things? How far out are you? And how does that factor into managing and the communication to stakeholders, especially if you need to even raise more capital in the process of that?
I think we try to think out about 2 years, but I think realistically, those glasses are only reasonably focused in the next 12 months, because it's very hard to know there's so much new technology involved in what we're doing, and there are so many external factors and things that are unforeseen, that it's very difficult, I think, to make reasonable promises and predictions about things that occur more than 6 to 12 months in the future. But in terms of us devoting budget and energy to game concepts and ideas, that's a 2-year plan, because many things take longer to develop. And as I like to remind people when they ask about, how have we managed at least to have some modest success with the sandbox so far, I remind them that it's a five-year development process so far, and we're still developing it.
Yeah, it's insane how much time's gone. And Pio looked like you wanted to say something.
No, I mean, I was gonna. Last question for me. Just at this point, does blockchain gaming take longer? Does developing the sandbox take longer than it would to develop like Call of Duty, because it's this brave new world of blockchain? That's like question one, or question A, and then question B is like, is that going to change? And blockchain gaming is going to kind of catch up in terms of development time, and just be the new normal for gaming.
So yes, I think it will be much faster in future, because at the moment, most blockchain games that are developed tend to be a little bit like, making a game in C++ without actually using a game engine, because there aren't the same kind of tool sets and middleware and things like that. A lot of things, like, especially if you make a hardcore game, there's no instrumentation. We don't have ad networks. There's, none of the infrastructure of the well-oiled machine that is Web2 gaming exists in Web3. And that's why these products take a while. So things like, in the sandbox, we had to create all our creator tools, and in fact, we changed blockchains, right? We originally started it on Ethereum back in 2018. And the guys at Sky Mavis with Axie Infinity did the same thing. I mean, they built their own blockchain midstream just to be able to try to accommodate what they wanted to do in the game. So I think there's still a lot of that innovation going on, but with my investing hat on, I've seen a lot of companies working on the middleware layer and tools, sort of picks and shovels tools to make the creation of games in Web3 easier. Some of whom we invested in and some of whom we didn't, but there's a lot out there and a lot of smart people. And I think the thing that I continually point to when people ask me about the current market situation and how I feel about the market relative to several years ago, I think the one massive difference, capital aside, is that the amount of talent in this space is orders of magnitude bigger than it was 2 or 3 years ago. Some of that purely followed capital, but I think most of it was actually attracted by just the very long lobbying and cheerleading process that all of us in the space have been doing for the last 5 years. And 3 years in, they're like, okay, I get it now, and they've jumped in over the last 12 months feet first, and they're not going anywhere because it's the result of years of observing and deciding whether they thought this was going to be a thing, and they've made their choice.
To piggyback on what Pio was saying here, I'm sort of wondering in terms of like well, actually, something that you said was the C++. Really, I'm very technical. The C++ analogy is spot on, because I was thinking, hey, like Unreal Engine and Unity are kind of like the major behemoths in the gaming space. I guess Unreal is the only one that matters now, according to some people I talk to, but whatever. Both have had a major impact. Are you investing in that area right now, like in terms of like development toolkits? Is that an area of focus for you all as investors outside of
Yep.
the gaming studios?
Yep, absolutely. So about half of our investment portfolio is in picks and shovels type stuff, everything from layer 1 blockchains to wallets to middleware, you name it, anything that just makes that makes building in Web3 and easier and increases Web3 adoption.
I love it. Well, I really appreciate you taking the time today. I feel like, Pio, did you have anything else?
No, I mean, thank you so much, Robbie. I think our audience really appreciated this. I know I did. Any closing thoughts that you want people to know about Animoca or anything that you guys have going on?
No, I don't think so. I mean, I think if anything, I just encourage people, especially if you're not in the Web3 space yet, to just open yourself up a wallet and give it a try, and have some fun.
A couple of rapid fire questions, because I've regretted this in the past, actually, not asking this to other people, and I missed a big story. Any acquisitions recently or impending that that are about to go down here?
So recent acquisitions, I would point to TinyTap, which is our first foray into the education category. And we just launched recently, last week, our first NFT collection from TinyTap, which represents something really exciting, and that is trying to see how we can leverage Web3 tools to help teachers really be rewarded for what they do.
I love that. So we'll check out TinyTap. And the other question is, have you been taking customer deposits at all and lending those out to other people? That would be another common thing. I've missed that question in the past. Just wondering.
Yeah, no, we're not a massive crypto hedge fund, I'm afraid. Sorry.
Okay. All right. Well, that's very helpful.
You heard it here first, ladies and gentlemen. Animoca Brands is not a Ponzi scheme. Thanks so much to Robbie, the CEO of Animoca North America. Great conversation, Robbie, and hope to have you back in the future. Thanks so much.
Great. Thank you very much, gentlemen.
See you guys later.